Hello guys, and listen, welcome to your market report for Monday, the July 9th, 2018, and glad to have you on the show. Now we're going to get the market started. We're going to open the charts right here. Now, first thing we're going to take a look at is the silver price. There's been a lot of upward movement today in the silver price. I noticed that we've gained 18 cents. But the silver price has been steadily increasing, and it's getting back up to its old range again in around 1620, more or less. Its old lower range. Now, there's two ranges that it was running in for the longest time, and one range was like between 1620, 1630 along in there, and the other range is like 1720 and 1730 and along in there. So now that we're getting back up out of them $15 ranges again, and that's good. We're getting up out of the 15s. We don't want to see 15s. We're into the 16s. Well, it depends. If you're buying, I hope you accumulated some when it was in the 15s there last week or whatever. Now, let's take a look at Bitcoin. Bitcoin today is 67.27. And if we take a look at this chart, you don't see a whole lot. It's on the 1 minute. We're going to go back to the 30 minute. You'll see a little bit more. This is the $5,700 dip right here. And as you can see, we've been slowly moving upwards ever since the dip. Now, I'm expecting it to go as high as 7,500 on this little surge that we're on right now. I expect it to keep going. 7,500, and then I'm thinking it's possibly very likely going to roll over again. And why I say that is you have to go back and take a look like at the, well, let's try the 12-hour here. If you take a look at the 12-hour, what you see is successive lower highs and lower lows. If you take a look at the 12-hour. And I believe that right about in here, it made its second low. I'm going to call it its second low. So we made one here. And we've made one here, and I'm expecting one more, a third bottom, maybe even a fourth bottom, 3 or 4 is what I'm expecting. And so we've made the second one. I got a couple, and I'm going to try to get a couple, not a couple Bitcoins, but I got a couple, what do you call it? Not Satoshis. When you buy 1/100th of a Bitcoin. Anyway, I got a couple of those, and when it was at its bottom at 5,700, I told you guys I'm going out and buying. Now, I'm not giving you guys any financial advice. I will tell you the day I'm going to go out and buy, though, myself, personally. There's nothing wrong with me telling you when I'm going to go out and buy. So when it was 5,700, I said, hey, I'm going out and buying. And I think that we're going to have a buying opportunity coming up again pretty soon. I think she's going to go up to about 7,500 bucks, which would be right about where that crosshairs is right there. Right? And now see what she's been doing? She went down to 5,700. She come up to here, and then she rolled over. And then she went down here, and then she come up, and then she rolled over again. And then she's down here. Now she's going to go back up. And so if it proves to lower highs, this high was here, this high was here, and the next high will be around here, about 7,500, and then it'll roll over again. Now, it's not going to do this forever. Bitcoin's not going to do this forever. This bear market's not going to continue forever. We're going to go back into a bull market. We've always went back into a bull market with Bitcoin going all the way back. If you go back to the 1 week chart here, you can see that it goes all the way back to when it was $2.22. And what do we see? $2.22, and then we see this. It's hard to see it down here. Okay, let me focus the chart in so you can see it a little bit better. We get right in here close, you know. Might be able to get so you can see it a little bit better. See when it was $2.22. Just a second here. Let me get the chart in as close as I can get it. Now, you see this first little hump here? It's hard to see it. It's a little bounce up. And this was one of the first big climbs we had. I think it went up to like 260 bucks or something. And then she fell back down again. She went along for a period right here. And then she had this big climb up here to like $1,150, and then she fell off for a while, and then she went along again, and then she climbs up again. Well, now if you expand out to this big one we got now, okay, where it climbed up this big mountain we got now it's fell off. It's doing the exact same thing. It's going to fall off, and it's going to go down here. It's going to go along for a little while, like it's done every other time before. It's going to go along for a little while, and then all of a sudden she's going to start to climb again into a bigger mountain. And this every time this thing it climbs, this big massive bull market comes, it's always exponentially bigger than the last one. Generally, it's 10 times bigger. So this one here, the fall, if you take the percentage, now see this one right here. Let's focus in on it again. Just give me a second. We're going to focus in on this one right here. This particular mountain right here, the one that came directly before the one that just happened. This one right here. It went up to like $1,150, and then it fell back down again. If we can compare those percentages, right, to this one here, and then we compare those percentages to the one that's coming, what we'll see is we'll see a fall off down to 4,000, roughly, if we compare the percentages, and then we'll see a climb up to roughly 330,000, somewhere in that area. So that's what sort of percentages, if it follows true to what it's done before over and over again in the past, if it keeps following true to that. So we should see a high of like $300,000 or something crazy like that on the next one, if it follows those percentages. And it very well could. I mean, nothing's impossible for cryptocurrency. I mean, it's made an awful lot of people rich. And I think it'll continue, and the more excitement, every time it gains more excitement, it gains more people, and it gains more acceptance worldwide. And right now, it's a speculative asset. But eventually, this is going to move into becoming a more than a speculative asset in the end. And people aren't going to laugh. There was a time going back on these smaller mountains here, like this $260 mountain way back here. Or even the $1,100 mountain, when there's a lot of people out there that laughed at it and they scoffed at it. Well, they're not laughing and they're not scoffing so much now, and they still are a little bit. But as it becomes more accepted in the end, well, suffice to say, you know, there's where we're going. Cryptocurrency market capitalizations. $273 billion today, and Bitcoin dominance of 42.6%. So Bitcoin dominance is actually riding quite high. And Bitcoin's actually doing very well, along with a number of other coins. Bitcoin Cash is actually doing very well. I think Bitcoin Cash is going to be a great coin, really, I'll tell you. EOS looks extremely promising, too. And so does Litecoin. These are all great coins. IOTA, I like IOTA too, and I like Tether, and I like Neo. I don't know so much about Tron, but I like Monero, and I like Dash. I like a lot of these top coins, you know. I don't like to get out of the top, say the top 20, and that's where it about ends with me. I don't like to go down into these coins. Seem to me much more risky. When you start getting out of the top 20 and you start getting down into these coins like gosh knows, you know, some of these coins down here, they're going to die. They're going to die. A lot of these coins down here are going to die, you know, because there's just too many of them, and they're just not going to be successful, you know. Of course, there's a lot of money to be made if you can hit one that's down in the real low ranks right now and moves up. Oh man, you can make out like a bandit, but I mean, it's awful risky. It's a lot less risky if you're into the coins that have already made it and are really stable and everything. I think probably one of the safest coins out there is Litecoin. Price wise and everything, Litecoin is probably one of your safest coins. It's only $82 a piece for them this morning, which is really good. EOS is a good one too, and it's a good price on that too at $8.57 this morning, and so is Bitcoin Cash at 748. So anyway, let's move on to the Dow Jones Industrial Market right now. 191 points up, and the reason why it's up so much is the bad news about Donald Trump's trade embargoes and everything. This is what's driving the market. Of course, I'm being a bit sarcastic, but that's the way it seems. It seems like the market goes up on bad news, Anyway, let's take a look at the sweet light crude oil futures, 73.794. This is actually more important than the stock market for the economy is oil, and oil is going to go crazy in the future, not too far in the future either. Maybe 3 years from now, there's going to be an oil crunch, a tremendous oil crunch. And the reason why we've had oil prices drop and everything, and there's been plentiful oil the last few years, the last couple of years, it's got everything to do with the United States of America and shale oil production and fracking, something called fracking. Where they actually use steam and high pressure to go down and free up oil from old wells that used to be capped off. What happened was they went through Texas and everything back in the day, and they dug these wells, and the oil would shoot up into the air 300-400 feet in the air. It was under such pressure, and they would have to go in there and cap that well off, and they would have to suck that oil out, and it took them like 30 years to suck the oil out, and they kept sucking it out until the end. There wasn't any pressure left down there. There wasn't any oil hardly left down there. And then they capped the well off because they didn't have the technology to get any more out. And they did that all through the oil belt, and they made movies about it, like one of the movies they made was the Beverly Hillbillies, where they had the Beverly Hillbillies went in and he shot a bullet into the ground, oil come pouring out of the ground, and it made him a millionaire. Back in the days when a millionaire meant something. Nowadays, a million's nothing. I mean, you could spend $1 million for lunch, practically. I mean, it's just like, but back in those days, $1 million was really $1 million. It was like $1 billion now. Actually, it was more like $1 million back then was more like $10 billion now. In buying power, tremendous buying power. A millionaire was really something to be a millionaire. Like if you went back to the 1950s or something, So Jake Clampett, he shoots this bullet into the ground. Oil comes bubbling out. He becomes a millionaire. He gets like $80 million for oil that was on his place, in Texas or wherever, some hillbilly place. And they move him to Beverly Hills, him and Jethro and Ellie Mae and old Granny. They move them out of the cabin and into Beverly Hills, and they buy a mansion. And they treat the mansion just like they treat the cabin, and they still stay hillbilly-ish in Beverly Hills. And that was the premise for the Beverly Hillbillies. But that's back in the day when oil was oil, And they drained all that oil out of Texas, and then what they did was there's oil still down there, but they didn't have the technology to get it out. So later they invented the technology, and there was a new oil boom. They came through again, and they fracked everything with fracking. But there's a problem with this fracking. The problem lies is the original oil reserves, there was a mass pools of oil down there. They drained all of them out, and basically all that's left down in there is a bunch of oil that's stuck to them, clinging to the rocks. It's like leftovers. It's like when you have a big dinner, and there's a few leftovers. The leftovers aren't as much as the turkey dinner was when you first had the turkey dinner. There was more abundance there, right? But then the next day when all you got left is leftovers, there's less amounts, And that's the way with the oil. This was leftovers from when the original oil was there. So they put the steam pressure down in there, and what they find is it doesn't pump out as long. Like the original well might have pumped out for 30 years. The new frack oil thing only pumps out for 3 years, 1/10 as long. And then it goes dry and it has to be repumped and re-steamed again. And then the next time they come in, it doesn't pump as much again. It's less again. Each time they do it, each time they re-steam it, each time they put pressure down in there and get it going again, free up that oil, less comes out. Less and less and less, diminishing returns. And so this is what has happened is basically they're scouring the bottom of the barrel. They're getting the last of the oil out of West Texas and out of these places. Now they found new fracking reserves and new reserves in West Texas, but those reserves are much deeper and they're going to be much harder to get. You know, and it's going to cost a lot more to get that oil up and out. And it's the same way with when they go back and they refract all these new wells. It's going to cost a lot more to get it out. So what's going to happen is because West Texas has been what's keeping the world going on oil, and the Saudis are starting to run out too, they're having to pressurize their wells and everything else. People do not realize how all of a sudden we're hitting this inflection point where the oil in the world is starting to actually, we've used all the best oil reserves up. And it's just going to hit suddenly, boom, like that. We're going to find out that there's not much oil left, and all of a sudden the price is going to shoot upwards. And I'm talking $300 a barrel oil. Right now we're looking at 73, and we're thinking it's expensive because we're down to $29 a barrel there. Not that long ago either. Just like, I think it's like 2 years ago or a year and a half ago. And now it's went up to 73, and everybody's thinking it's expensive. That's not expensive. It's going to triple. It's going to go 3-4 times the price it is now. And I'm not talking a long period of time from now either, only a couple more years. Oil prices are going to go up that high because we're going to run out of oil. But at the same time, the exact same thing is going to happen to silver. Not to gold. Not to gold. It's going to happen to silver. It's happening to oil. Reserves are going to taper off. Now, gold's a different animal altogether. They have tremendous gold reserves on Earth. There's actually about 6 times more gold on Earth than there is silver in reserve. Silver is actually in much tight, and it's selling at 80 to 1. It doesn't make any sense, really. Really, it doesn't make any sense. There's room right now for the gold and silver price to narrow down to at least 1 to 10, maybe even shoot all the way to 1 to 4. There's room. And it's just a tremendous situation we got in the Earth with gold and silver. I mean, silver is possibly the biggest bargain on Earth next to, well, let's just put it this way. It's going to be really good. Now we finally starting to get some movement on these bonds. They're finally starting to move in the direction I said that they would move. They stayed low. Man, these yields stayed low. I'm not really worried. I'm not worried as much as some of the other guys that of a flattening yield curve. I'm not so worried about that. I don't think the yield curve's going to flatten because I think it's going to stay roughly about where the percentages are going to stay roughly about where they are right now because the long end's going to move up along with the short end. They're all going to move up together at the same pace is what I think they're going to do. So I'm not so worried about a flattening yield curve. What I'm worried about is these rates rising to a certain point, and also the 3-month LIBOR rising up to match the U.S. 10-year, because there's trillions of dollars riding on that. But these rates are finally starting to rise here in a significant way today, and I expected this a little bit earlier in the month. I expected it to start around the 1st of the month, and now we're at the 9th. So it's a little bit surprising to me that it's lagged this long before they're finally starting to move, but they're starting to move. They're starting to move today. I expected them to be already over 3% by the 9th of the month today on the U.S. 10-year, and it's at 2.85. So, I mean, it's going a lot slower than I thought it would, but it's starting to move. It's starting to move. So it's starting to move in the direction that I thought it would. U.S. dollar index today, 93.88. So we've had a little drop in the U.S. dollar index. She was riding up 94. She even touched 95. She's down to 93.88 today. And this is the reason why we're seeing some movement in the silver price upwards, which is a good thing. I like to see silver moving up. Now, Deutsche Bank today, she's seen a little bit of movement up, in the last few days. But today she's moving down again. Today she's 9.75 today. Deutsche Bank is not going to recover. I don't know who's buying these stock. They're thinking they're going to make a fortune, and what they're doing is they're basically pumping these stock up a little bit. But ultimately, I think they're going to drop again, and these guys are going to get these bag holders are going to get hurt on this. Because I don't think it's going to make it too much over 10.5 euro before she drops again. What did she make it up to here? It's about 9.76. Well, let's take a look. 5-day, and we'll see what we got. It made it up to 10.02, and I think that probably the peak is around 10.5. 10.50 is the peak, and so today we're looking at, well, it's taken off right now a little bit this afternoon, but I don't think it's going much of anywhere, to tell you the truth. Now, Zero Hedge is doing an article here. It says, why the coming oil crunch will shock the world. And yeah, it's going to shock the world. It really is. It's going to shock the world. But for people that are watching things like my show, you realize that this is coming. This oil crunch is coming, and one of the reasons is because the shale oil represents the last oil play in these large, vast areas of U.S. oil, like West Texas, the Permian Basin, which is the biggest basin in the United States, and these are the last plays, these shale oil plays, and these fracking. It's the last ditch effort to pull oil out of the ground. And when that's over, and when the fracking's all capped off and it's done, there's going to be no more oil coming out of these areas except for extremely expensive deep oil that's very hard to get, So we're going to see huge price increases in oil, because they will make it so that these deep oil plays come into their own after a while, because the oil that they're hauling out right now, they can get it out of there for like $40 a barrel, and they can still make a profit. But when they get into these deep oil plays, they need like $70 a barrel to make a profit. Well, that's all right. If oil's only $70 a barrel, and you need $70 a barrel to get it out of the ground, you got no profit left. But if oil goes up to $300 a barrel, then $70 to get it out of the ground is not so bad. Then you can make a nice profit, a nice tidy profit, and then those oil plays become profitable at $70 a barrel, so the deep oil, and then they'll go after the deep oil, and they'll start getting the deep oil. And it's the same way with the oil sands. The tar sands is the last biggest untouched oil reserve on Earth, is the Canadian tar sands. It's the last biggest. Now, when they first raided Saudi Arabia, they raided them, I think, as 196 billion barrels of oil, but they've been pulling that oil out of the ground for the last 30, 40 years and supplying the whole world with it. But the tar sands are rated at 186 billion barrels of oil, but they haven't been touched near as much. And so they're very possibly the tar sands have more oil trapped in the tar sands than Saudi Arabia has at this point, and also more than Venezuela has. Venezuela has an awful lot of oil, but it's like 40 billion or something like that. So the tar sands outweigh everything else, but it's cost prohibitive to get it out of the tar sands. It costs like $70 a barrel again. And so, needless to say, over the last couple of years, the tar sands have not been very profitable. But they're going to be profitable when the price goes back up to $300 a barrel. And I know a lot of guys out there hear me say $300 a barrel, and they think impossible. It'll never get over $100 a barrel. You just watch and see. You're going to see $200-300 a barrel oil. So listen, thank you guys for listening. Like and subscribe, and we'll catch you on the next show. Bye-bye.